Be ready.
Hi, folks. Jeff Gramlich here. I'm a professor at Washington State University, and I'm going to be interviewing a friend of mine, Jon Lee, at Southern Utah University. And Jon has developed this really cool tool to help students and their parents maximize their tax refund related to the American Opportunities Tax Credit. And the first question I have is why do people miss the American Opportunities Tax Credit? Jon?
So there's a lot of different reasons. First of all, I mean, this is a substantial credit. It can be up to $2,500 per year for a student while they're in their undergraduate program. And there's a few reasons they miss it. One is they just fail to put it in their tax return. So their university is going to send out a Form 1098-T, and a lot of times it's electronic. And if they don't put it in with their tax return, sometimes they just miss this awesome credit. So that's the first one. Second, a lot of college students are actually claimed as dependents on their parents' tax returns. And in that case, the parents are the ones who actually have to claim the credit. When the student, but there's a mismatch because the student actually receives the tax form, Form 1098-T, and the parent's supposed to claim it. If the parent doesn't know to ask for it and the student doesn't know to give it, they're like, I don't want to mess with taxes. They can miss substantial credits. That's where I've seen the biggest credits missed, because when I say up to $2,500, usually the parents are the ones that get the bigger credits because they owe more tax, and there's reasons for that. So that's a big one. If you have dependent students, make sure you're asking them for their 1098-T. Or if you're a student, make sure to give it to your parents.
Jon, in your experience, do universities, is it possible for somebody to log on to the university website and access that if the student lost it?
Exactly. Yeah. So a lot of times you'll have a university portal. For example, at Southern Utah University, you have your SUU portal, and there's an option, and it's at the very bottom for SUU, but there's tax notifications. And they'll always, I mean, I can't imagine a university not having it there. You pull up your tax notifications and it shows you your 1098-T for each year. Go check, especially if you think you've missed this, go and make sure to get those. I saw one student get almost $10,000 in 1 year from this. And they were a dependent student. Their parents didn't know to claim it. And what they did is, when I taught them about this, they went back and got the prior 3 years plus the current year. They claimed the credit in the current year, the parents did, and then they amended 3 years of tax returns and got another $7,500. So it was incredible. And yeah, just log into your account, tax notifications, Form 1098-T. And especially if you're a dependent of your parents, get it to them, because they may have substantial credits there.
Okay, now you're going to walk us through the third one. There was a third one about a third way that the American Opportunities Tax Credit gets overlooked.
So the third one that I also see all the time is students that receive Pell Grants. The IRS came out, it was probably 2014, and they said there's 9 million students that receive Pell Grants. And because of the grants, a lot of times they don't receive the credit, and they miss out on hundreds of millions of dollars of tax refunds each year. That's what the IRS came out and said. And this was 2014. This was a long time ago, and it hasn't changed. So what happens is, if you receive a Pell Grant, a lot of times it'll offset your tuition cost, which is what the credit's based on. If they offset each other, you can't claim the credit. But the IRS instructions say, look, if you recognize your Pell Grant as income, which is a bit counterintuitive, right? Who wants to recognize more income? But by recognizing it as income, you may increase your tax sum, but then you get this huge tax credit up to $2,500 per student, right? Per year. And again, that when we talk about the American Opportunity Credit, it's for your first 4 years post-secondary education. So for your bachelor's degree, once you're doing graduate school, or you can only claim it 4 times.
Degree seeking.
That's right.
Great. Okay. All right. So want to take us through?
Yep,
And
I'm going to walk you through an example of that last situation, a married couple. And I've set this up. Let me share my screen. I've set this up for all three situations. So even a parent with a dependent, the calculator is set up for that situation as well. But I wanted to give you an example of that third situation where a married couple receives significant Pell Grants and scholarships, and at first they're not receiving the credit, but by recognizing it as income, they'll receive the credit. Okay, so we have Liam Lerner. Here's his Form 1098-T that he got from his student account, right? And you can see he paid tuition of $8,500 and has scholarships and grants of $12,000. Of that $12,000, a lot of times, and this is another thing you'll need, is the detail of scholarships and grants. With the electronic version, a lot of times if you scroll down, it'll have a detail of what they were. You can see he has a tuition scholarship of $6,000 and a Pell Grant of $6,000. In order to do the maximization, you can't recognize tuition scholarships as income. It has to be like a Pell Grant or a scholarships that isn't limited to tuition. But we'll walk through it. So that's Liam's, or that's Olivia's, sorry, and Liam's is very similar. $8,500 in tuition, $9,000 in scholarships and grants. Part is a tuition, scholarships, and part's a Pell Grant.
So Olivia and Liam are a married couple, right?
Married couple. Yep, the learners, okay? So married student couple. So you prepare the return, meaning you just put in all your information, all of your documents, because the information from the return is what will be used within the calculator to make sure it's maximized correctly. So, and that's been done with Liam and Olivia already. So we've already entered all of the documents. You have your disclaimer, so I encourage you to read and make sure you agree with. And then now that you've entered everything, you're ready to go maximize. So let's hit next. So you put in your email, Liam at student.edu, Liam Lerner, and we have Olivia Lerner, okay? And then you have your filing status, which you can grab from your tax return, but we have married filing jointly. Hit next. And then are you claimed as a dependent on someone else's tax return? In this case, they're not. But if they were, you hit yes, and it'll give you more information on how to file the return for someone who's claimed as a dependent, okay? So, but we're gonna put no. Hit next. How many college students are on this return? There's 2. Liam and Olivia are both going to school, so we have 2. And then is the student on this tax return the taxpayer and or spouse, or a dependent of the taxpayer? And this one is the taxpayer and or spouse. We asked that dependent question because we may have the parent who's claiming their child as a dependent. And different questions need to be asked depending on the type of taxpayer. Okay, now let's see if you qualify to maximize the American Opportunity Credit. We need information from your draft tax return, which we have here, and your Form 1098-T for each student. So we'll hit next. First student's name, we'll start with Liam. He is a junior, and he's 19 to 23. Then it says retrieve the Form 1098-T, which we were looking at before. So we're going to go grab Liam's Form 1098-T here, and we'll jump back and forth. So
John, why is the age so important there?
So the age, mostly if you're a married couple, it's not as important. If you're a dependent student, it's important. And specifically, if you are not a dependent and you're 19 to 23 or even 18, you potentially can't claim the refundable American Opportunity Credit. So I'm glad you asked about that, because I'll have students that think they can claim the credit, and if they're between 19 and 23 and they're independent, if their earned income is less than half of their support, meaning they're receiving support from somewhere, they can't claim the refundable American Opportunity Credit. I run into that a lot. If you are an independent student and you're making good money to support yourself, that doesn't apply, but it can apply if you're not making a lot of money as a student. So yeah, that's why that age is important. Okay, so yep, what's that, Jeff?
Thanks.
Yep. Okay, so on the 1098-T, we're going to go ahead and grab the numbers. So box 1, payments received for qualified tuition and related expenses. Most of the time you can rely on the 1098-T. I get a lot of student questions for why is the number higher than I expected or lower? It's all based on when the money's paid out for your tuition. So if the money goes out in December, it's going to show 3 for spring semester. It's going to show 3 semesters on that 1098-T. So be aware of that. It's on a cash basis for when the money goes out. So in this case, so most of the time I like to rely on the 1098-T because it'll match it up that way. So if we jump back to Liam's, he has tuition expenses of 8,500 in box one. So we'll do that, 8,500. And then scholarships or grants of 9,000 in box five. So we'll do that, 9,000. Is there a number in box 4 or 6? So those boxes are for adjustments made in a prior year. If we jump over to his 1098-T, he doesn't have them. It gets a little more complicated if there is. So if you put yes, I give you a bunch of information as to what you need to do for that. But here we'll put no, hit next. How much did he pay for books and other required course materials? You get to include those costs. A common question I get for this is, can I put my laptop or other expenses I had for school? It has to be required by your course. So if it's in the syllabus, that's what I usually go off of, is the book. It's a required book, required materials. I don't do computers a lot of the time because they're not often on the syllabus there. So cost of books, and in this case, Liam had 400 in book costs. That doesn't show up on your 1098-T usually. Well, it won't. So you'll need to get those costs from your Amazon account or wherever it is, get the book cost from the student. The next question, did you have distributions from any other accounts that paid tuition? So these are like 529 plans, Coverdell, IRAs, etc. If you have those any distributions that paid tuition, you need to put yes and put the amount. In this case, it's a no, but that will affect the calculation. So that's important information. Every question.
How does it affect the calculation?
So it's treated like a scholarship or grant. So it offsets your tuition. But the nice thing is, and I can show you really quick. Let's say how much did you receive? If you received $1,000 from those accounts, the nice thing about 529 plans and these other education accounts, they can be used for rent. They can be used for meals, right? So if you withdrew 1,000, but you spent more than 1,000 on rent, if I put 1,200 here, then in the calculation, that's not even going to affect it because it's being used for those other costs, which is really awesome, right? So yeah, but that's how that works. So I'm going to just delete that. Let's go there and put no. Okay, so then we'll hit next. So Liam has scholarship income of $100 based on that information. So where did that come from? It represents he had scholarships and grants of 9,000. He didn't have any 529 distributions. So we subtract tuition and fees, which was 8,500, giving him 500 net. Well, negative 500 for the credit, right?
So he has, the form.
Yeah, for the form, it's 500, but then you have to subtract the books, which was 400. So the excess scholarships over all of those costs was actually $100. Does that make sense?
Yep.
So when I hit next, so what's going to be often missed is the student doesn't know to put that into the tax software. If it's, I'm going to keep refreshing this so we don't lose it, but so this calculator helps them report it correctly first and then go back and fix it, okay? If it's Turbo, I know some softwares like TurboTax will automatically put that 100 in as scholarship income. TaxSlayer doesn't, so it's going to depend on the software. So when I hit next, let's do Olivia Lerner, and she is a senior and 24 or older. So we'll hit next, and we're doing the same thing. We're going to go grab Olivia's 1098-T. She has tuition costs of 8,500. So put those there in box 1. Box 5, her scholarships and grants are 12,000. So we're going to do 12,000. And we're going to put no for, is there a number in box 4 or 6? And next, her books, she came in with receipts with $200 worth of book costs. And she did not have any distributions from a 529. So we'll hit next. Very similar process to what we did for Liam. Her scholarship income is 3,300, calculated the same way, right? She had, and I can even jump over to her 1098-T where she had 8,500 in her tuition. Scholarships and grants exceeded that by 3,500, but then we subtract out the books. But still income. Any scholarships that aren't used to pay tuition are actually taxable, where if they're used for tuition, they're not taxable. So
And where does that go on in tax layer? Where are they supposed to put that?
great question. That's the next slide here, because I guess not slide, next page. We have scholarship income for both of them, and potentially they haven't even put it in yet. So let's verify that all of the above information was input correctly. So we'll hit next. Liam should have scholarship income of $100. So then it tells you where to put it. And in a future iteration, I'll probably have it set up to where if TurboTax, it'll tell them exactly where to put it, H&R Block, etc. But it's very similar. But for tax layer, we're going to go to the federal section. So over here on the left side, we click federal. And I'm just going to be jumping back and forth here. Income, less common income. So I'll click on income. And then in my list, I'll do less common income. Then other compensation, scholarships and grants. It's kind of hidden in there, but other compensation here. And then scholarships and grants. And you can see Liam and Olivia have already entered their tuition statements just like we did in the calculator, but it didn't automatically calculate that scholarship. So what we're going to do is if we go back to the calculator, it says, is the scholarship and grant income amount correct? It says scholarship and grant should equal 100. If we put no, it says in tax layer, please enter 100 for Liam Lerner's scholarships and grants. So we're going to go back, Liam's, we're going to do 100. Okay. And then select yes above. So now it matches. So excellent. It appears everything was entered correctly for Liam. Now let's see if we can maximize the credit. So for Liam, because he has not answered these questions or the calculator doesn't know this information yet because he had scholarship income. We need to know whether he qualifies for the American Opportunity Credit. And these are the requirements. Do all of the following apply to Liam Lerner? Liam received Form 1098-T from his educational institution. That's a yes. Liam has not claimed the American Opportunity Credit or Hope Credit on 4 prior tax returns. So even if you're still in your undergrad, if you've claimed it 4 times, you can't claim it anymore. So he has not, so that's yes. Liam Lerner was enrolled at least half-time in a program leading to a degree, certificate, or other recognized educational credentials. Yes. Liam Lerner had not completed the first 4 years of higher education before 2023. Liam Lerner has not been convicted of a felony. So he needs to answer yes to all of those questions in order to claim the credit. If we put no, then we would do lifetime learning credit. So we'll put yes, hit next. So now we jump to Olivia. Olivia Lerner should have scholarship income of $3,300. We're verifying it in the same place. And as we can see, it's not there. So if we put no, please enter 3,300 for Olivia. So we're going to put 3,300 in that 3,300 in scholarships and grants. Hit continue. And that'll update the return. And you can see her federal and the state should come through. And when we put yes, now we can move on. We're going to answer those same questions for Olivia to see if she qualifies for the credit. Hit next. So this is where the magic happens. And I even put that. This is the most important part. And I've had students just kind of breeze over this part. So I've kind of tried to put it in red and make sure they get this. Please read and answer the following question very carefully. Please access your scholarship and grant detail at the bottom portion of your 1098-T or in your student account and add the following. So we want to add any grants or scholarships that aren't strictly limited to tuition. And in this case, again, students generally, you'll have a scholarship detail below your 1098-T. If you don't have that, you can find that detail in your student account. And you need to look at the tuition. If it's a tuition scholarship, we can't do it. But with Pell Grants, we can. So for Liam, we're going to put 6,000 there. So we'll jump back. Total scholarships and grants that can potentially be recognized as income is 6,000. Good news, you can potentially increase your tax refund by recognizing a portion of your scholarships and grants as income. So perfect. So Liam, there's potential for maximization here.
Great.
So, and then for Olivia, same thing. We need to go to her detail, 1098T, and she has Pell Grants of 6,000 as well. So we're going to jump back. Let's just do that and put 6,000 there. Same thing. For both of them, good news, you can potentially increase your tax refund. So let's grab the information from TaxSlayer now. So it says TaxSlayer information. Please enter the AGI, federal tax, and state tax found on the summary print page. So if I jump over here, on the left side, we click on summary print because we need these numbers before we do the maximization. Give it a second. So adjusted gross income, you can see is 38,400. So we'll put that 38,400. Federal tax due or refund, and you can see tax due we'd want to put in as a negative. So federal tax amount due, it's kind of in two places. It's here and then up here in the corner, but negative 623. So right now with the information we've done, they owe 623 in federal, but they're getting a state refund of 862. If you have multiple states, just add up the total refunds for each state, add them up here.
Okay.
So you can see right now they have a total refund of $239. I have some important notes here. At this point, if you qualify for Medicaid or you qualify for the earned income credit or the premium tax credit, I want you to contact the VITA site, whether it's the SUU site or another site, just to make sure, because these programs have different phase out amounts. So it may be detrimental to you to recognize too much income if you're on Medicaid, right? So that's an important point. If any of those apply, reach out for assistance. That will be built into the calculator at some point, but isn't yet. So that's an important point here. So when we hit next, now let's see how much you can save with this strategy. First, we're going to recognize a portion of scholarships and grants as income. There's that trick where we're saying we have these grants, let's recognize them as income. So please go to the following location in TaxSlayer to change Liam learners' scholarship and grant income to the amount below. So we're going to go back to where we recognize the income. So federal section, income, less common income, other compensation. So we're going to go here again, federal. Income. And then it was at the bottom, less common income and other compensation, scholarships and grants. And it wants us to change it to, for Liam, we're changing it to 4,100. So if I go here, we were only recognizing 100, right? We're going to increase that by $4,000. Okay, 4,100 for Liam. Please go to the following location for Olivia and change her scholarship and grant income to 6,000. So we're already there. So we're going to change Olivia's scholarships and grants to 6,000. Hit continue. And what you're going to see is the tax liability is going to increase because we haven't changed the credit yet. So I'm going to hit next. Now let's decrease scholarships and grants in the education credit section for the amount you recognized as income. So now we're finishing that loop. We recognized it as income. Now we're going to decrease the amount we're recognizing as grant for the credit. So please go to the following location in TaxSlayer to change Liam learners grants to the amount below. So this is where we're going back to the education credit section, and it shows you how to get there. But we'll go to deductions, education credit, and we're going to go to Liam's to start. And his qualified expenses were 0 because we had that big grant that offset his tuition. We're going to go change that. So once we get back to where we entered the expenses, it says change Liam's student one grants to 4,900. So here, grants were 9,000 previously. Because we recognized 4,100 as income, we're going to change this to 4,900. Hit continue. And you can see now his qualified, by decreasing those grants, he now has qualified expenses of 4,000, which is the max qualified expenses for the credit. And you can see the refund's already increasing, but let's hit continue because you like to make sure everything goes through. And there's those eligibility questions. And you can see, look at that American Opportunity Tax Credit, 2,500 now. So we've already seen a huge difference and we haven't even done Olivia yet. So we'll hit continue. And then it says, please go to the following location and tax layer to change Olivia learners grants to the amount below. We're going to change her grants to 6,000. So we'll jump back for Olivia. Her qualified expenses again were 0, but now because we recognize that grant as income, we can change her grant amount from 12,000 to 6,000. So in that calculation, rather than offset the full tuition, now we have some tuition expense that can be used for the credit. Now her qualified expenses are 2,700. To continue, and you can see her max, we didn't go up to 4,000 because there's a limitation on how much grant can be recognized as income. So that was as far as we could go for Olivia's. So if we hit continue, we've answered our American Opportunity Credit questions. And you can see she qualifies for both. We want that American Opportunity Credit. Look how big that credit is for her, 1,113. We hit continue one more time. That should get us. And you
Wow, look at that. Look at that cool refund.
Isn't that crazy? So to finish this off, we want to compare because there are certain situations where if you're allocating so much income, maybe the credit isn't better, but for the most part it is. So, but we want to do the comparison. So now we're jumping back into tax layer and say, okay, what's our new AGI? Well, let's go to our summary print.
Okay, so now what you're doing is just kind of checking to make sure that you're at the max.
So that's exactly right. We want to make sure, okay, we did this trick. Did it get a better refund? And if it didn't, let's go on to it. Right. So AGI is now 45,100. We recognize an additional $7,000 in income, right? Wow, that would be a bad thing usually, right? Not with this credit. Look at our new federal refund, 2,320, 2320. And our state, where is our state? I'm not sure why that disappeared up there. We should have a state refund up there. There it is, 464. It was hiding from us there, but so 464. And if you'll notice the state refund went down, and that's because
I have a higher income.
Yep, you're recognizing higher income on the federal. A lot of times you get a little hit on the state, but total tax due refund is now 2,784. A quick notice with FAFSA. When you're applying for FAFSA, the federal Pell Grants, there's actually, it's based on your income level. What's interesting this year, I don't know if this is a new change, but it asks for your income, it'll ask for your tax return, but the next question is any scholarships that were recognized as income, you're going to decrease it for that. So this trick should have no effect on federal Pell Grant funding, which is pretty amazing. But it's important not to miss that when doing your application. So with that notice, we'll hit next. Total tax savings was 2,545. One couple, all they did was recognize more of their grants as income, and they have an extra 2,500 bucks. See, I see these.
Wait a second. John, so what if they're like juniors or seniors now and they didn't do this in the other, like the first 2 or 3 years? Can they go back and get refunds for those other years?
You can go back up to 3 years and amend tax returns. And that's
why
if
you're doing 2023, for example, or whatever the year is, right now it's early 24, and you're looking back at 23, 22, and 21. Could you go all the way back to 20?
You could go all the way back to 20. Yep. And that's what, with that student that almost got $10,000, we lucked out because he learned about it his senior year. We did that current year and then amended the 3 prior years. I mean, it's amazing how much money, and when the IRS comes out and says, look, hundreds of millions of dollars are missed every year for this specific, what I just showed you. And you can see with one couple, it's $2,500. It's pretty
Great,
substantial.
great. Is there anything else that you want to add before we wrap this up?
Well, I'll just add, I hope people will take this seriously and go try it out. Look at your 1098-Ts, look at your prior tax returns and your current year and see if you've missed this money. I guarantee about half of you probably have it out there. From what I've seen for the people coming to me at SUU, it's roughly half that can actually use this maximization strategy.
Great.
So
Thanks so much, John.
yeah.